Hello everyone. Central banks take center stage this week. With the Fed, BOE and BOJ all meeting, gold, dollar yen and pound dollar could be poised for their next major move as renewed Middle East tensions reignite inflation fears. This is your midweek technical outlook here at xm.com. Now let's get right to it. Now let's start with gold, which is currently attempting to build on its recent recovery near 4,100. But with the Fed decision looming, can bulls finally break above this key resistance, or will higher for longer rates push prices back toward the 4,000 floor? For now, it's extending above this descending channel intact since mid-April and the descending trend line and above the 20-day SMA. But though this rebound looks quite fragile, it should resume the key resistance to watch for more sustained upside is this 50-day SMA near the 4,200 level. That said, there is a bearish crossover between the 100 and 200-day SMA exerting further technical pressure. So downside risks do persist, and then gold could target the 4,000 floor, which has been holding intermittently since late November. Should it be breached, then the next key level to the downside to watch is the 7-month low near the 3,940 level last visited in June, before it could target the 3,885 level, tracking October 2025 lows. The momentum signals are reflecting this consolidation for now, and this modest rebound. So it's likely to continue unless a breach to more decisive breach to the upside occurs to shift sentiment. Now let's also have a look at dollar yen, which remains close to 40-year highs ahead of the Bank of Japan meeting, with traders watching whether policymakers can offer the yen support through a more hawkish tone. For now, it is pulling back from this fresh 40-year high, which was notched on Friday, but it is trading just a tad below near the 163.50 level. Should it extend to the downside, initial support lies at the 162.85 level, followed by the 161.50 below the 20 SMA in the descending trend line, and then the 160 psychological level, which hasn't been touched surprisingly since early June. Now to the upside, a rebound and amidst the absence of any intervention, as the pair is in intervention territory, could then target the 164.50 level ahead of the 165 psychological mark. The momentum signals are reflecting this consolidation for now, although that they're also mirroring the broader bullish bias, which holds very much intact for dollar yen. Now let's also have a look at pound dollar, which is rebounding from recent lows ahead of the Bank of England decision. But can the sterling sustain the recovery as markets reassess the outlook for UK rates and growth? For now, it looks like this pullback from the 2-month high near the 1.3545 has found a floor near this 3-week low near the 1.33,000. However, it looks like a fragile rebound. It's meeting strong resistance near this SMA cluster, with the key target upside target being the 1.34,000, where the 200-day SMA lies. Should it attempt to extend the recovery toward the 1.3460 and perhaps the 1.3500 mark. But for now, this rebound looks increasingly fragile, also reflected by the momentum signals. The market is losing steam from positive territory, and the RSI is still flatlining below neutral, suggesting that this consolidation here or a deeper pullback could occur in the near term. So in that case, a breach back below the medium-term ascending trend line could target the 1.3260, which is the 23.6% VBO of this pullback from the 11-month high near the 1.3650 to the 6-month low. And then a break beneath this level would expose this 6-month low, which was touched in late June near the 1.3140 level. Now that's all for today's market wrap. Thank you for watching.